Now we're going to talk about your projected profit and loss. Now I'm going to start with what a profit and loss is. It's incoming cash, subtract the cost of goods sold, subtract your operational expenses, and then that will equal your net profit or loss. So what we're going to do is start with the sales. You have to document what your incoming sales revenue is to be, and from that you subtract your cost of goods sold. So how much does it cost for you to buy your product that you're going to be selling in your shop? So take the incoming sales revenue that you project and then subtract the cost of goods sold. For example, if you had 10 million in incoming sales revenue, I'm just throwing a number out there, and it cost you 2.5 million in order to get the product, in order to make those sales, then your gross margin would be 7.5 million, what's left over. So let's move on to the personnel section. First, I would suggest that you list your employee job titles and then list the annual salary for each employee. Now, I would exclude independent contractors. If you're not having somebody go through your payroll and you're not paying payroll taxes for them, and they're not paying payroll taxes, then this is considered an independent contractor, and that would be in your operational expenses section. So anybody that's going through payroll is what you would consider an employee. For example, let's just say you have a manager that you want to pay $60,000 a year. You have an assistant manager that you want to pay $45,000 a year. You would have, let's just say, 4 bud tenders and employees. All 4 of them together would make $150,000 a year. And let's just say you have 6 delivery employees, if that's allowed in your city, state, at with a grand total of $210,000 a year. Maybe you have a part-time accountant that you pay $35,000 a year. So you add all those up, and all that together equals $500,000 a year. This is just an example, of course. But I just wanted to put it in perspective so you can start listing how many employees that you would like to have at your establishment and their respective annual salaries. Now, moving on to operational expenses. Anything other than the cost of goods sold, payroll, and taxes that you pay is considered an operational expense. So, for example, this could be rent on your storefront, utilities, office supplies, office maintenance, legal and professional fees, any subscriptions that you would pay a monthly or annual fee to keep for business purposes, security services. A lot of cannabis businesses outsource their security to a specialized cannabis security company. So since they're not going through payroll, this would be considered an operational expense. Website expenses, etc. So anything like that is considered an operational expense. So I'm again throwing a random number out there for you. If your rent is $1,000 a month and you pay rent 12 months out of the year, you'd be spending $12,000 a year in that category. So $1,000 a month times 12 equals $12,000 a year. I would do the same for each category. So you would have your annual totals of how much you will be spending for operational expenses a year. So just to keep in mind, it would be sales minus cost of goods sold, minus payroll, minus operational expenses will equal your profit before taxes. Now, another term you might have seen before in the past is profit before taxes is also known as EBITDA. So taxes will vary on how your organization has been organized. So it depends on how you will organize and in what state, county, or city. If you are an LLC or an S Corp, a C Corp, doing business as, this will all depend on how you will, if you have not yet organized, if you have to think about how you will organize in order to possibly investigate your tax rate. So it is important to know, though, that local cannabis business taxes vary from state to state and from city to city. So there are different tax rates for different cannabis business models. So if you are a cultivator, for instance, you will have a different tax rate than you would be taxed as a dispensary. That's just an example. Some cities will have a higher tax than others. So it's very important to look at your city or state regulation and see what your tax rate will actually be for your particular business model. So I'm just going to give you an example. Let's just say your profit was $6 million before tax. Let's just say that your tax rate as a corporation was a flat rate of 0.21 estimated tax rate. So that would mean that your estimated taxes would be 1,260,000 in estimated taxes. That's just an example. Again, it'll vary from state to state and from city to city. So I'm just going to give you an example so you can kind of get a gist of how this works a little bit. Now, after we did that calculation, you would go back to your profit before tax, which was the $6 million. Okay, then you would subtract the roughly 1.2 million in estimated taxes that we just calculated from before. And so that would mean your net profit is 4,740,000. That's how you come to that calculation. So let's go to our task list for this section, which is a bit more complex, but we can get through it. You're going to start with your sales forecast. Then you'll move on to your personnel. Then you will calculate your operational expenses. After all of that, then you will do your estimated taxes, and then that should be your landing profit. All right, let's move on to the cash flow and balance sheet section.